Live.
Hello, everyone. Thank you for tuning in. So this session, we are going to talk about exchange-traded funds, or rather known as ETF. So our speaker will be sharing with you what are ETFs, their differences with unit trust, their pros and cons, and factors to consider when selecting ETF to invest in. So our speaker for this session is Jason Wong, the research manager from iFAST Capital. So he has 10 years of experience in various finance and investment-related roles. So currently, he's responsible for overseeing the Malaysian research team, which covers Malaysia, Thailand, and Indonesia markets. All right, and also some investment products domiciled in Malaysia. So, okay, so Jason, are you ready?
Yep.
Yeah, so we'll pass the time over to you.
Okay, you can see my screen, my slides, right?
Yes, we can see.
Good morning, everyone. Thanks for joining in with me on this fine Saturday morning. The topic of my presentation is what you need to know about ETFs before you invest. Before we proceed, we'd like to take some time to show you our disclaimer. Please take some time to go through it first. Okay, so first of all, the popularity of ETF has exploded over the years, as you can see in this chart right here. In 2020, total ETF assets exceeded 7.7 trillion US dollars, up 38,000% from only 200 billion in 2003. And this number is expected to hit 9 trillion by next year. Where are the major ETF markets? If you can see through this chart right here, the clear leader that is seeing the most inflow, the bulk of the inflow will be the US and major other developed markets as well, like Japan, China, European region as well. In Malaysia, it is still very much in its infancy. You don't really see the ranking over here, but it's still very much developing over here in Malaysia. Next, I move on to what is ETF actually. It is a short form for exchange traded funds. Most people know it as ETF. So exchange traded funds are just like funds, investment funds that are listed in a stock exchange, and you can trade, buy or sell on a stock exchange. So your money, when you invest in an ETF, it is pooled with money from other investors, and they invest according to the ETF's stated investment objective. And these ETFs, they may be structured with a collection of securities ranging from stocks, bonds, commodities, or a mixture of all these different asset classes. And this ETF, they allow investors to invest through a diversified portfolio at a lower cost with better pricing transparency because they are traded through the exchange. What are the differences between stocks, ETFs, and unit trusts? Each of these investment vehicles have their own unique propositions for investors. So if you look at the table right here, in terms of listing status, stocks and ETFs, they are listed on a stock exchange, whereas unit trusts are not. And because they are listed on a stock exchange, you can trade these stocks and ETFs throughout the day, and the price continuously moves throughout the day according to the market movements. Whereas for unit trusts, you only know the price when you buy, okay, 2 days later, because they are based on forward pricing. And for ETFs, because it's traded in a stock exchange, so there's prices. You can queue to buy at the price that you like. You can queue to sell at the price that you like as well. In terms of volatility, stocks has the highest volatility because it is a single counter. There's a lot of company risk. If anything happens to that company, you see wild swings. For ETFs and unit trusts, they tend to have lower volatility because they invest in a portfolio or basket of securities. And because of that, you have diversification benefits. Next, we talk about the management of these different investment vehicles. For stocks, because you buy and sell them by yourselves, this requires active management by you, the investor, to track the individual stocks, to track the developments, the news, and the performance. Whereas for ETFs, they typically are passive investments. They'll follow and track a certain index, and you'll follow the index performance very closely. As for unit trusts, most of them are managed actively, and because of that, the manager will pick the stocks and the sectors or the geographies that they like, the countries that they like, and try to outperform the index. In terms of cost and expense, ETFs and stocks, because they are traded on a stock exchange, so they will have processing fees. Whereas for unit trust, there's management fees, annual management fees, which ultimately leads to an annual expense ratio, which typically is around 2 or below 2%. Then for liquidity wise, because they are traded on stock exchange, so stocks typically and ETFs, they would have liquidity depending on the individual stock and ETF. So the bigger ETFs would have more liquidity. Whereas for unit trust, there's no concern, no worry about liquidity, because when you want to buy or sell the unit trust fund manager would need to buy and sell back from you. In terms of diversification benefits, stocks does not give you that kind of diversification benefit compared to ETFs and funds, because ETFs and funds, they invest in a portfolio of securities. In terms of counterparty risk, stocks and unit trusts typically don't have counterparty risk, except for ETFs that have synthetic ETFs. I'll talk a bit about talk about this more later. So why is ETF so popular, especially in developed countries like US? What are the benefits? So here are some of the key benefits. Number one, lower costs, because the annual management fees are significantly lower compared to unit trusts. So they can go as low as 0.03% per annum, whereas typical unit trusts would charge at least 0.5, 1% and above. ETFs also have intraday pricing. So that means you can get in and you can get out within the same day, and you can choose the prices that you wish to trade at. And the risk for ETF, because you know that you're investing in this ETF that tracks certain indices, the risks are generally, you know the risk, and they generally not exceed whatever the underlying index is. And you know when you invest, there's a greater certainty of what are the component securities, because they replicate the index, compared to unit trusts, because normally if you look at the fund fact sheet, they only show like the top 10 stocks that the fund holds. So because of that, you get less transparency in terms of what are the individual stocks that the portfolio are holding. Now I'll talk about an example. Okay, there's an ETF in Bursa Malaysia called FTSE Bursa Malaysia KLCI ETF. So this is an ETF that tracks the KLCI index. Everyone would know the KLCI index, which are the 30 largest stocks in Malaysia. And typically, if you wanted to buy these KLCI index stocks, what would you need to do? You will need to buy one by one, like Public Bank, Maybank, Tenaga, one by one. And this will require huge capital if you want to buy all the 30 stocks, right? But now through this ETF, just buying one ETF, you can gain access to all these 30 stocks in the KLCI index. So how can you access this? You can find it through your broker or remiser or online platforms such as fsm1.com.my. Just type KLCI and you go to the ETF fact sheet such as this on the right-hand side. And some of the key information that you would need to look out for are already in the fact sheet. For example, what are the stock exchange that the ETF is trading in? What's the name of the ETF? What's the ETF provider? And what is the product type? So in Fund Supermart, we actually segregate out, or we specify what are the product type of the ETF. So there are two, typically, physical and synthetic ETFs. So for physical ETFs, that means the ETF are holding, the underlying holdings are the actual securities of the index. They're actually holding the stocks of Public Bank, the stocks of Tenaga, for example. Whereas for synthetic ETFs, they use financial derivatives such as swaps or excess products and do this to track the indices. rather than hold the actual securities. So why do they do that, or why do they need to do that? Is because some markets may not have the, it's not easy for foreign participants to access. So for example, like the Indian stock market, they have restrictions on foreign capital investing in India. So if you were to fully replicate the Indian stock index, you can't do it unless you do it through derivatives like swaps. Okay. Next, you also see the currency of the ETF and also the last time price, similar to stocks. You also see the investment objective of the stock, which is to replicate closely as possible before fees the performance of the FTSE Bursa Malaysia Large 30 Index. Okay. Very importantly, what you need to know is what are the underlying index of the ETFs that you invest in. So in this case, FTSE Bursa Malaysia KLCI Index. So through the fact sheet, you can see all this key information. And just a fun fact, this ETF was the first equity ETF in Malaysia, incepted in 2007 until now. ETFs holdings are transparent and easily accessible so that you, as the investor, you know exactly what you're getting into. So in the fact sheet itself also, you can see what are the top holdings. So for example, like KLCI ETF, this one, the top holdings are Public Bank Tenaga, Maybank, Toplam, and so on. You can also access this information through the ETF provider or Bursa Malaysia. On Bursa Malaysia website, you go to this announcement page for ETFs. You can actually download the Excel, and it's very detailed of the daily holdings and the NAV of the ETF. If let's say, okay, I like this, I want to buy this, I click transact, I'll go to a screen that should be very familiar to a lot of stock traders or stock investors. So you will see something like that, the price, the volume, open, close, the high and low price, and the volume, okay, the bid-ask prices. Investors can buy and sell these ETFs on the stock market, just like stocks. Okay, so what are the determinants for the price is determined by market demand and supply, similar to stocks. Then in terms of volume, some may look at this, seems like very low, but worry about the liquidity. So I would have to say is that the trading volume here does not indicate the liquidity, because at the back, there's designated market makers that are designated by the fund or the ETF providers to provide this liquidity. And they also provide competitive bid-ask spreads or the bid-ask prices so that investors can get in and get out of the ETF. So for example, this one, the FBM KLCI ETF, the designated market makers are M Investment Bank and Malacca Securities. Typically, you can find this information on the ETF provider website. Okay, then what do? They actually accumulate these necessary stocks that make up this ETF basket and divide it into tradable units to meet the investors' demand and supply. So here you can see how many people are buying, they're queuing to buy, how many people are queuing to sell. Yeah, so similarly, you can see that you can queue at the price that you would like to trade at. So let's say, for example, I would like to buy this ETF. Similar to stocks, if I buy the ETF, it will settle at T+2. If I sell, I'll get my money after T+2. Then similarly, they also trade in board lots. The minimum lot follow Bursa Malaysia is 100 units. So the minimum investment, let's say this price is 1.55 right now. The minimum investment will be 1.55 times 100, 155 ringgit. Okay, so with 155 ringgit, you can gain access to all the 30 stocks, a basket of 30 stocks in Malaysia, which severely or drastically reduces the initial capital that you need when you invest in stocks. And you also achieve the diversification benefits by investing in a portfolio. Next, other than FBM, KLCI in ETF, what other ETFs are there in Bursa? In total, there are 12 general ETFs. Okay, so you can gain access to markets like China, okay, Malaysia. There are other Malaysia ETFs as well. Malaysia ETFs that have different objectives, like investing in Islamic dividends or investing in 25 big companies in Malaysia. You can also gain access to ASEAN stocks, ASEAN equities, Asian equities, Asian REITs in particular, then Malaysia bonds, and also commodity related, which is the gold. There are also leverage and inverse ETFs in Bursa, which are for sophisticated investors only. So what are these? So for example, we have this US leveraged ETF that's linked to the FANG, okay? And this is 2 times leverage. The 2x means it's 2 times leverage. Then the other one is FANG Plus also, but it's -1. So this is an inverse tracker. What does this mean? Okay, so for leverage ETF, let's say it's 2 times leverage. That means if the index of this FANG Plus goes up by 1%, the ETF would go up by about 2 times of that. Okay, similarly, if the index drops 1%, the leverage ETF would drop about 2% as well. So it's double the risk, double the gain, okay, for leverage ETFs. Then also, what is inverse ETF is basically the opposite. They'll react opposite to the index that it's tracking. So for example, if the index drops 1%, the inverse ETF will go up by 1% and vice versa. If you want more than what we have in Bursa Malaysia, you can also consider investing in foreign listed ETFs. There are a lot. Then, for example, on Fund Supermart, you have access US, Hong Kong, and soon to be Singapore ETFs. And one thing to note is that before you invest in US ETFs, okay, you need to submit this W8 band form for tax to declare your non-US tax residency. Okay, so in the US, there are 3 main exchanges that provide ETFs or that serves as a platform for ETFs: NASDAQ, New York Stock Exchange, and the BATS, which is a Better Alternative Trading Systems Exchange. One thing you need to know will be the trading hours, because they trade on the stock exchange, so they follow the trading hours of the stock exchange. Okay, so if there's public holiday in that country, then you won't be able to trade the ETF. You can find this information on the websites. So if you go on to Fund Supermart Malaysia, you can access to more than 2,800 ETFs at the moment, okay, with Singapore Stock Exchange ETFs on the way. So if you have 2,800, what kind of exposures can I gain through these foreign listed ETFs? Just to get you started, you can gain access to these core equity markets like US, Europe, China, Japan. You can also have tactical plays, which typically you cannot get through unit trust. Like for example, global cloud computing ETFs. So these ETFs focus on investing in companies that are in cloud computing. If you like the cloud computing, you like cloud, there's a lot of potential, maybe you can add this to your tactical portfolio. You can also access global healthcare, global banks, global semiconductor. So if you like semiconductors, if you think there's a very strong growth and demand for semiconductors over the next decade, you can consider, for example, a global semiconductor ETF, which typically unit trust doesn't give you access. And typically, if you want to buy stocks, you don't really know which to buy, correct? You can also go very, very detailed, very, very micro. Like for example, in this case, there are ETFs that cover China tech specifically, China healthcare specifically, China banks, China semiconductor. So if I like China, but I only like specific sectors of China, then I can pick and choose whatever sector that I like to buy. Then I just omit the sectors that I don't like. Okay, so ETFs also can give you exposures to very unique or exotic investment propositions, which also you can't get through typical unit trust. For example, there's an ETF that invests in Africa equities. There's an ETF that invests in Argentina equities, Egypt equities, Spain equities. There are many, many other more. These are just examples. You can also look for like very unique exposures, like, oh, there's very huge potential for video games and esports going forward. There's an ETF for that as well. And if you like mobile payments, There's also an ETF for that. There's also Bitcoin ETF. There's also ETF that give you exposure to the potential upside for oil and also clean energy if you like. So there are so many ETFs in the world. How can you filter them? On Fund Supermart, there's a ETF selector, which is a very useful tool. For example, in this example, I want to find China tech ETFs that trade in Hong Kong dollar. So I just pick the criteria that I want: China, Hong Kong dollar, physical ETFs, technology, and equity. And this list comes out. There are 1, 2, 3, 4, 5, 6 Chinese tech ETFs. Okay. One thing to notice is that we have this risk rating here, which is useful for investors to know what kind of risk they are taking on. So we have this proprietary risk rating methodology. Each ETF, you can see we have a risk rating, okay, which is in their fact sheet as well. And the higher the number, the higher the risk. Typically, low risk one are like fixed income ETFs. The middle one will be your balanced ETF, and the equity funds will be the 7 to 10 risk rating. And the 10 will be the most risky because, for example, China tech, they only invest in Chinese tech. If, let's say, the Chinese government comes and impose new regulations, it'll drag down the whole China tech market, but there's no other, you can't really get away from that. Whereas if you invest in a portfolio like KLCI, if let's say banks don't do well, but there are other stocks within the portfolio to support the portfolio. How do I select the best ETF? Here are 4 things that we look out for. Expense ratio, okay, the lower the better, because over the long run, it will eat into your potential profits if the expense ratio is high. We also look at the tracking difference, how closely the ETF tracks to the index. Liquidity as well, because the bigger the liquidity, the bigger the volume, typically the spreads will be very close. Like for example, this VO Vanguard S&P 500 ETF, you can see the bid-ask spread is only 1 cent. Okay, in terms of qualitative criteria, we choose the index, the structure of index. Typically, physical one will be better, and also what are the exchanges that is listed. So with so many ETFs out there, where do I start? We have this ETF focus list where you can start. We already pick the best ETF for each segment that we think that we like. Okay, so to wrap up, why are ETFs so popular? Because low cost, their annual management fee is significantly lower. Some can go up to 0.03%, those very big ETFs per annum. And intraday pricing, you can do your, you can buy and sell throughout the day. You can pick the price that you want to buy, you want to sell. Okay, compared to unit trust, you can't do that. And the risk, they generally do not exceed what's the underlying index. If you're investing in KLCI index, that's the risk that you'll get. And you know what are the components that you invest in. And through ETFs, you can gain access to a whole wide variety of different asset classes, different geographies, and different unique investment propositions that typically unit trust you can't get. Okay, so I think that's all from me. Are there any questions? I would like to take some short questions if there are. Okay, so
Hi, Jason. So we
yes.
actually have a question here. So what do you think about other Asian ETF?
Asian ETF?
Yeah, I think he meant is maybe ETF like from SGX or Bursa Malaysia. So do you have any comments on other ETF like that?
Not sure what. Okay, any comments about other Asian ETFs?
All right. So is it a good opportunity to invest in China and Hong Kong tech sector ETF?
Oh, okay. So for Chinese tech sector, I think recently there've been some drawdown. Okay, it's down more than 40% from the peak, and this was triggered by a lot of bad news coming from the regulators in China. So it all started off from last year when they pulled back N IPO, the N Group's IPO, you remember? So there was it actually triggered a lot of scrutiny, and Chinese government start to really look into how these tech companies do their business. But we think that this is I think it's you can say a recalibration, and then they are setting the direction for all these companies going forward. And I think it's a healthy thing. It's not a detrimental thing, except for education. That one is unfortunate. But for other tech companies, I think they're setting the direction correct. I'm telling you, you have to do this. You cannot exploit your user data. You cannot do anti-monopolistic behavior that take advantage of your market position, this kind of thing, to promote healthy competition within China. This kind of antitrust or anti-monopolistic regulations have been in place in countries like US and Europe for many years already. It's only recently that, after what happened recently, that Chinese government have really started to crack down on it. But we believe that this is something healthy, okay? And because of that, it brought a lot of negativity and brought down the stock prices. But I think the long-term potential, the long-term secular drivers for this Chinese tech industry is still very strong. I think at this current juncture, the valuations are very cheap. If I just take Tencent, for example, they're trading at 20 times PE. It's like you can never get Tencent at this kind of valuation ever. So if you like Chinese tech companies, you see the potential in Chinese tech companies, now definitely a good valuation to go in. And the volatility might still be there, okay? But if you are okay to ride it out over the next few years or long term, definitely a good price to enter. One example is I look back at 2018, where the Chinese government actually cracked down on Tencent exactly because the kids were spending too much time on playing games. Yeah, so they actually imposed regulations on Tencent. The Tencent stock at the time dropped 40% similarly, but subsequently it recovered because the fundamentals of this company was so strong, and they continue to churn out revenue and earnings growth that are very strong. So I think definitely at this moment, China tech looks very attractive to me.
Yep. All right. So thank you, Jason, for the insights. All right. So ladies and gentlemen, this will be the end for this session. And do remember to redeem your exclusive gift in our gift redemption page in this simulation, where you can find great offers, including offers from SFM1, where you can enjoy cash management fund when you invest in Bursa Malaysia stocks and ETF on FSM1. All right. And it's only open up to the first 500 registered only. So quickly head over to our gift redemption page now. All right, so coming up, the topic for the next session is finding your edge and selecting the winning stock, shared by Louis Lau. So Louis Lau is the head of research from Malacca Securities. So click on the button on the top